The Debt Demolisher TV with Sophia Melonē.
Hi everyone, it's Sophia Melonē, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. In today's episode, we are continuing our conversation with the tax series Taxes 101, where I'm going to continue to talk to you guys about the differences in the types of penalties that may be assessed for tax purposes through the IRS. So the failure to pay penalty is completely separate and different from the failure to file penalty that we covered in part 2 of this series. So the failure to pay penalty only applies if you do not pay the taxes that are due and that are noted on your return at the time you file or at the time that return is due, even if the extension is approved. So the penalty that you must pay is a percentage of the taxes that you did not pay at that time. So what the IRS will do is they will also send you a notice to let you know whether or not if they have applied a failure to pay penalty. With that, they calculate the penalty based on how long your overdue taxes have been remaining unpaid. So unpaid taxes is a total tax that's required and that is shown on your tax return minus any amounts that was paid through withholding, through estimated tax payments, or through allowable refundable credits. The failure to pay penalty does not exceed 25% of your total unpaid tax. So they calculate the failure to pay penalty based on 2 scenarios. Number 1, if you fail to pay your amount that's shown on the tax return. And then number 2, based on if you fail to pay the tax that you didn't report on your income tax return. So a lot of times people may end up getting a notice in the mail from the IRS indicating that they have adjusted their tax liability. And if the IRS ends up adjusting that tax liability as a result of you not reporting income that they actually received information that was reported, indicating that you were the recipient of that income, and it results in a tax liability, they will pay or assess a penalty on that. So that's what the failure to pay on the taxes that you did not report on your return is related to. Any failure to pay amounts, let's talk about the first side so that way you can kind of know what that means. Failure to pay amounts that is shown on your tax return. If you don't pay that amount as shown that you owe, they'll calculate the failure to pay penalty by taking 0.5% of the unpaid taxes for each month or part of a month that tax remains unpaid. Again, like I said before, the penalty will not exceed 25% of your unpaid taxes. Now, if you are in an instance where you fail, where they're assessing you a penalty for failure to pay and a failure to file penalty, if they're applied in the same month, the failure to file penalty is going to be reduced by the amount of the failure to pay penalty that was applied in that same month. So as I shared before in the example, is that instead of a 5% failure to file penalty being incurred, they would apply a 4.5% failure to pay or failure to file penalty and a 0.5% failure to pay penalty. So what that means is both penalties within a month cannot exceed 5%. So they'll max it out at 5% per month, and it'll go up to 25% overall. So that's kind of like the purview of how the penalties work in that instance. If you are someone who is also from the state of mind where, okay, you filed your tax return on time, but you have an approved payment plan, and the failure to file penalty is still applied, but it's just reduced. So instead of it being 5% or 0.5%, it's 0.25% per month during any approved payment plan that you have. So another thing you want to look out for is if there's failure to pay penalties as a result of income that you did not report or taxes that you did not report. If they find that you owe taxes that you didn't report on your return, you'll get that notice. And you'll generally have 21 calendar days after they send you the notice, or 10 business days after they send you the notice if the tax amount is $100,000 or more. You have 10 days to pay or 21 days to pay. Otherwise, you'll get hit with that penalty. If you don't pay your tax bill by that due date or based on the notice or the letter that they send you, you'll get a failure to file or failure to pay penalty of 0.5%. And it'll continue again, and it won't exceed 25%. So if you file your tax return on time and you have an approved payment plan, that reduces to 0.25%. And if you don't pay your taxes in 10 days after getting a notice to intent to levy, the failure to pay penalty is 1% per month. And what they will do is they will fully apply monthly charges even if you pay your taxes in full for that month. So don't think just because you paid in that month that they won't incur any interest or penalties for that. They will still apply it for that month. They will assess interest on penalties, so they charge interest on penalties. We talked about this yesterday. In tomorrow's segment, we're going to be covering interest on underpayments and overpayments, so that way you can have more clarity on that. When it comes to paying your penalty, we discussed this yesterday. You want to make sure that you send your payment in, so that way it can stop future penalties and interest from adding up. You want to go ahead and request to see if there's a possibility for you to either remove or reduce the penalty. And the way that you do that is by showing that you acted in good faith and that you can show reasonable cause as to why you were not able to meet your tax obligations. Again, I've said this before, that by law, the IRS cannot remove or reduce interest unless the penalty has first been removed or reduced. So you want to go through that process to see if there's a possibility for you to see if you apply for penalty relief or penalty reduction, so that way that you can get your chances of challenging the interest more so. When it comes to disputing a penalty, you can do that by calling the toll-free number that'll be on the letter that you receive. If you do get hit with a penalty, they'll send you the notice. The penalty, you want to go ahead and include a letter to indicate the penalty that you want them to reconsider, meaning the IRS. And then for each penalty that you want them to address, you want to explain why you think that they should remove it. Again, you want to have your good faith. You want to show a reasonable cause as much as possible to be substantiated inside of your letters to see if they will go ahead and abate that. If you want to avoid a penalty, the best way to avoid a penalty is by filing and paying your taxes by the due date. That's the only way that you can ensure that you will not get penalized. You file on time and you pay on time. If you can't do so, you can apply for an extension of time to file or put yourself on a payment plan, which we've talked about. You can apply for an extension to file if you need more time to file. We all know for tax year 2021, that means that the taxes are due Monday, April the 18th, 2022. If you need more time to file, you can file an extension. Even if you file an extension, if you end up owing, that does not mean that you have an extension of time to pay. So either way, taxes are due on April the 18th. So get your payments in on time, get your taxes filed on time, so that way you can know what your liability is. And that way you can make sure that you pay or put yourself on an agreement to avoid incurring a failure to pay penalty.
The Debt Demolisher TV with Sophia Melonē. The Debt Demolisher TV with Sophia Melonē. The Debt Demolisher TV with Sophia